Walk me through, how do you see the cycle? Obviously, a lot of people talk about 2021 being the super hype year, and then 2022 being the minus 70% crash, and then a couple of my friends, and I include myself here, I believe that the first crash of Bitcoin in 2013, 2014 was because of Mt. Gox. And 2017 was because ICOs just bubbled this entire thing up, and then it just had to come down. So my thesis is, if in 2021 we don't see this major hype driver, we're going to see maybe minus 30, minus 35% setbacks, but not this minus 70, minus 80% setback. How do you see this? What's your
I've been thinking through the same thing. What's interesting is the seasonal cycle of Bitcoin is pretty clear. So it goes up early Jan, then corrects, then goes up in Feb, corrects in March, April. And we're kind of seeing that exactly play out now. And then it explodes into June. I think it gets to 100,000. And then it corrects sideways. Sideways in Bitcoin terms is like down 30%, but for an extended period of time until, let's say, September, October, maybe a little bit earlier, and then it explodes into the end of the year. What's interesting is this cycle also looks pretty much like the 2013 cycle. It's pretty close. It's actually pretty close. It's diverging a bit from the 2017 cycle because it's actually ahead of it in terms of price movement. So that's how I see the rest of this year playing out. Next year, I'm kind of with you. I'm kind of thinking that we won't have a big collapse because of the new participants. Mm-hmm. So what happened last time around, it was all retail, and retail had made a lot of money. And so they wanted to convert back to fiat to buy things. And the more it went down, the more they thought, oh shit, I want to buy that car I was going to buy, and stuff like that. But with more institutional adoption, I think the volatility comes down over time. And maybe it just sideways corrects like gold did for the last few years, where it traded down 30%, but over 18 months. So it's just boring. And you bore people out of the trade, and some people accumulate over that period. I think that's probably the most likely. I think there's also a outside chance that, we all look at plan B stock to flow, and I use a number of different ways of getting a price projection. I use a regression analysis on the log chart. That gives me, for it to get to kind of one standard deviation overbought, it's about 400,000. But if it gets to two standard deviations, where it got to the last two times, it's 1 million. I think there is a risk that we all think, and I see Plan B asking this question a lot on Twitter, where do you think it tops out? Mm-hmm. The skew is to the low side. The skew is around the 150,000 to 200,000. Mm-hmm.
200,000, I agree, yeah. Mm-hmm.
It's 288,000 number. People are really not sure on.
Yeah.
And anything higher, they're like, no chance, the lowest probability of all. And I'm like, I kind of like those odds. I kind of feel that we could have that shocking moment where a lot of people sell out at between 150 and 250 for these reasons. We've all kind of seen that, and we all think that could be the case, and we could overshoot. We could see an elongated cycle for the reasons that you said, because the institutions continue. So I don't know. It's hard to play. I think I will probably take some off the table somewhere in that, and probably hold some. So something like that. It's difficult to know what to do. You can just hold it. It depends what age and what you want to do with the money. You either want to keep it in Bitcoin because you want to just participate in the next cycle, so you just think of it as just a savings vehicle, or you want to cash in for lifestyle chips and buy yourself a house or a car or do whatever you want to do, and you need to time that if you want to take some money off the table to use for other purposes.
What's your antithesis to Bitcoin at the moment? Like, why wouldn't it work out?
I think the antithesis that I've got that is not on people's radar screens is, I've discussed this a couple of times and a lot of people still don't understand it, is Bitcoin's real value proposition is this store of value with limited supply that's kind of understandable. So we've heard the BIS and the IMF talk about the need for digital currencies. They've also talked about a new Bretton Woods moment. And what they've been talking about with that is the ability basically for everybody to print money at the same time in a unified agreement. Why? Because then you don't get one currency out of whack with the other. So you create less economic disturbance. Now, it's obviously that would be very powerful for Bitcoin and gold and some assets, probably equities. But what happens after that? What happens if they said, okay, we're going to create a global basket of currencies. And to be a member of this new world currency, your money supply can only increase by 2% a year or less. And it's rules defined. That makes that currency pretty interesting, right?
Mm-hmm.
Because it has some of the attributes of what cryptocurrencies introduce. It could be tokenized too. And anybody who fails to meet the criteria gets ejected from the basket. So then you have less of a need to protect yourself against the largesse of governments because you have a globalized currency. That would change the equation. It wouldn't change the other side of the equation, which is the new digital world that I'm talking about. That will explode in that environment. But Bitcoin would still be perceived to be a harder asset, but it'd be kind of like gold versus the US dollar, where some people would choose it and others would be happy to choose the existing system. Now, we all know that governments can't hold themselves to not printing money over time. But, you know, how long do monetary regimes last? 50 years? So I don't know. That would be the risk that nobody's thinking about, that Bitcoin loses its attraction, not because they ban it, not because they do anything else, but because they copy it in some way, shape or form.
That's an interesting one. I kind of had I thought about this a little bit, not as detailed as you have just now. I think that's an interesting one. I'll definitely do a bit of pondering on there. How do you see taxation, especially a wealth tax, taxing unrealized gains on crypto? How do you see governments making it really hard for institutions to have Bitcoin on their balance sheet? Kind of just putting a lot of hoops to jump through if Tesla, MicroStrategy, and so on want to keep it on their balance sheet?
I'm not sure how fearful central banks and governments are of it. I think they want their share of it, right? They run countries. Their job is to collect revenues and provide services to the populace. If they can't collect their revenue, they can't provide the services. So, of course, they need to tax it, and they should tax it in line with other assets. And it should be a pretty straightforward process. And that's okay. I mean, taxes are going to go up globally without question. It's one of the benefits of living in the Cayman Islands.
Or in Singapore.
Or in Singapore or wherever. But taxes are going up globally because we've got these largest deficits since World War II. So that's going to happen. I don't think that they need to ban it. I think actually, to have a good functioning ecosystem, financial ecosystem, you need alternatives. You know, it's like, you know, in the marine life outside here, you need sharks and you need the small fish and you need the middle fish. You need all the different things for a system to function. And I think they understand that. So they are trying to slow the brakes. They are trying to put the brakes on to slow it down. It's very clear that the energy story, Bitcoin is a waste of energy, came actually from the ECB.
Yeah. From the ECB, you think?
From the ECB, without question. Why? Because they want to slow adoption of the institutions. And the institutions all now have a legal ESG mandate. So if you can say, well, guys, because they've got around all the other stuff, it's for money launderers, blah, blah, blah. They've kind of stopped using that. They use it a little bit, but it's kind of proven.
No one's buying it anymore.
So the ESG, this is not your ESG mandate. I'd think about it if I were you guys. Boom, every single media outlet. And it's also not true. You know, it's actually probably driving a green revolution more than anything else, as, you know, hydropower start becoming the best way of doing this. We're seeing, you know, places like Iceland or gas flare-offs in Texas and in Canada and all sorts of interesting uses of driving down the cost of electricity, because the more you drive down the cost of electricity, the more you capture in value in your Bitcoin. I mean, it's the purest thing, right? There's nothing else that creates value out of electricity in the way that Bitcoin does. So everybody's incentivized to lower the costs, and lower the cost means greening. So, and in the EU, for example, because of the new carbon system, the European EU ETS system, it means that the price of carbon keeps going up. So you can't use coal or oil to mine for Bitcoin because you're getting penalized by the carbon that you have to pay for. So I think it's a very good thing overall. I think it's going to drive a revolution there. So that narrative is the other narrative that's out there to slow things down. And you see these narratives pick up from time to time. And it's to do that. I mean, the regulators are so far behind, they don't know what to do yet. Somebody has to take the lead. Asia's much further advanced in a lot of this. Singapore's done a pretty good job. Malaysia's done a great job. They're much further advanced in all of this. But then there's nations like India that are struggling to get their heads around, can we allow this? The US is a halfway house. Europe's a halfway house. It's a bit of a mess still.